Hello to everybody out there. Just verifying that everything is going well. Now, excuse me. Here in Latin America, it's the 2nd of October. Okay, and I think for the most part, what I would really try to express to everyone about trading is that trading is nothing like anything you have ever imagined or experienced. One person could look at a chart and see buy, another person could look at a chart and see sell, and before you know it, you have a person that's really about to commit a huge mistake. And if a person cannot dedicate his or herself to staying true to money management, to really being meticulous about everything that you do, then the reality is that you won't survive. And when I say that you won't survive, not surviving would be you basically margin calling left and right. Every high impact news that there is, you'd be margin calling, and essentially you'll just be chasing a ghost. Okay? And what you don't want to do is you don't want to trade that way. Okay? You don't want to be a ghost. Okay? Because then what's going to end up happening is you're going to have disdain as far as your outlook on life, how it works, the dynamics of economics, and you're going to really start to take a lot of things personally that you shouldn't. And then that's where the trading bias comes into play. Okay? So that's what we want to avoid. Okay? Now, for the most part, I think it would be easy to say that the market does have trends. Now, when I say that the market does have trends, people have to understand what a trend is. Okay? Now, some people may want to look up the definition. I don't need to look up the definition because my definition of trend would be different than someone else's definition. I trade the M1, which is the 1 minute, which means that every 60 seconds, if you see here on this where it says market watch here on the bottom left hand side of your screen, every minute you're going to see that one of these candles is going to stop essentially. Okay? It's going to stop moving and then another one is going to open up. Each candle is going to show you 5 things. The open, okay, if we spread this one out here, it's going to show you if you look here at the bottom here, bottom left, you're going to have these 5 boxes. Okay, each candle is going to show you an open price, which is O, H, which is the high, okay, of the candle, L, which is the low of the candle, C, which is the close of the candle, and the color is green. The color is green because it closed 60 seconds later higher than the previous candle. Okay, that's how you get the different colors. Now, depending on how you trade, and this is how I'm actually going to set this up, and this is the reason why I wanted to go live. I'm going to go ahead and I'm going to place another $8 order here. Now, in doing that, $8 a point, which means that you see where it says 132.96. If that 6 turns into a 5, then I would gain $8, or in this case $16, because I have 2 orders open. Okay, 2 separate orders open at 2 different times. That's why they're separated this way. Now, if you look at it, what you'll notice is it's actually tick by tick. You get to see everything that's happening. You get to look at all the other instruments. If I open up this market watch, I get to see all the other instruments that I want to see. I can even see the price of Bitcoin, okay, if I wanted to. But I don't trade Bitcoin, so I'm not even going to open up the price because it really doesn't interest me. Okay. Now, what I want to see here is I want to see the price. Okay, I want to see this price drop down to where it says TP, which would more than likely end up stopping here at the daily R1. Okay, or it may close up here where it says order 23, and that's where I'm going to be ready to buy. Okay, I'm going to buy for maybe, it depends. Let's see how this moves and the time in which it does it. But I'm more than likely to wager at least 4 times higher than what I'm wagering here, and that's what keeps the account looking like this. Okay, that's what gives you this equity curve. Okay, you just try to chip away as much as you can. So essentially that's what we're trying to do. We're not really trying to go for the home run, but since we believe that this is a formation 4, should the price within 1 minute close across this where it says order 23, should it close across here, I would close these 2 orders, and then I would attack it with a buy, and I would more than likely end up here where it says TP, or here at the red line which says R2. So then you start calculating more or less how much you would be risking. Okay, now one of the most important things that a person needs to understand when they're trading is the value of these lines. Let me zoom out. These lines, you have 3 R's, 3 S's, and what they call a PP, which is the daily main pivot point. Okay, and then you have the R's, which are the resistance. Okay, because obviously if the price is going up, you would consider the prices that are above you resistance, and if it's going down, you would consider the prices below you support. Really, if you think about the logic and the names that is used, you would actually come to the conclusion that you're automatically being, in a way, kind of misled, indoctrinated to think a certain way. Because if I think of something resistance, I think of something very difficult to pass through. And if I think of something support, I could think of a cushion. I could think of something soft, something more than likely that is very difficult to break through. But neither one of the prices would be softer or harder than the other price. So by simply giving those names, it creates a very ironic form of how you train these people, okay, newbies, how to actually trade. So you give them these terms, and then you expect them to understand these terms for what they are, and really they're not, because a resistant price or a support price has in no way, shape, or form, and cannot be proven with statistics, that the price would stop or at one of the 2 prices. Do you understand? With a higher or lower probability. What I can tell you is that those prices, those preset prices, and those prices are reset right after the New York exchange close. Right now in New York it's 223. Okay, so sorry, in New York it's 323. So what will happen is, once the US market closes, it would wait an hour after, which is the pre-market trading, and then you would get these new lines. How do you know that the lines are recalculated? Because watch how below, on the x-axis, which represents time, you'll notice that it changes. One moment. Okay, see there? See there? Here's the break. Okay? Here's the break between today. This is today's pivot. Okay? And this is yesterday's pivot. So when you see, imagine we are 25 hours in the past. It would lead us to this point here, more or less. Imagine now that we are here, and obviously we have no way of knowing everything that's going to happen. There's no way for us to know 24 hours from now, from this point, okay, or 25 hours from this point, the price would be 30 points higher, okay? There's no way to know that. But what you do know is that from that point on, once you get the new fibs, once you get the new pivots, remember, the pivots are the 7 prices that I told you, the 3 support, 3 resistance, and the PP. Well, once you get that calculation, there's one thing for sure and that you can definitely bet your money on. Within the day, within a 24-hour period, the price will always be attracted to one of those 7 prices. Always. It would at least touch it or trade right at it, and then you can see that it does it here. If you see this video, ask me for the script, and I will give you this script. It's free. I will give you this one, and it allows you to back test as far as you want to go, and you can see how the prices change, and you can actually verify what I'm saying. Okay, sometimes you'll see that once the calculation starts, the price would be 30 points away from either pivot, and you would bet 24 hours from that point it would move on. So then what I did is I started focusing on what occurs before the pivots are hit, and then I came to a theory. So the theory is, you know, basically the journey that I've taken through the Forex, all the winning, all the losing, and now I'm basically trying to share the information with you guys, give you guys the opportunity to ask questions, to learn, and for you to really understand how success is measured in Forex. It's not how much money you make, it's how quick you make it. Okay? The people that can run up accounts with 600% in a month, those are the guys that get the big checks. Those are the guys that get the big followers. Those are the guys that can get 500 people to follow them on Instagram and really copy them, and you can charge those followers $250 if you like. Okay? But you know, in this case, that's not what we're aiming for right now. Okay? Right now we're not aiming for that. So one thing that I can wholeheartedly say, and you know, of course, the situations could change depending on how well we are able to trade. But one thing that I can assure you is that we will continue to increase this account that we have here. Okay? And you're gonna have the opportunity to follow us free of charge. Okay? All you have to do is go to this link, okay, and you will be able to see, and this link is in the description, okay, you will be able to see my performance. Okay? You want to get these recommendations free. Most people are charging $200